All right, let's dive in. If there's one financial rumor out there right now that's, well, stunning enough to potentially reset the entire global economy,
Yeah.
this is probably it.
It's a big one. We're looking at a claim that really pits the old guard, the traditional reserve system, against what could be the future of digital finance.
We're talking about the potential for the world's largest economy to step away from gold, or at least a significant chunk of it.
Yeah, the hook comes from Pantera Capital's CEO, Dan Morehead. He's apparently suggested the U.S. isn't just sort of kicking the tires on Bitcoin anymore.
No. What's the claim?
The claim is they're preparing to rotate out of a pretty significant portion of their gold reserves. And the number being thrown around is up to $600 billion.
$600 billion allocated directly into Bitcoin.
That's the rumor.
Okay, that number.
Well,
It changes everything, doesn't it? So our mission today for you listening is really to give you a shortcut to understanding this potential paradigm shift.
right. First, we need to unpack where this rumor comes from, the specifics of it, and maybe explore the rationale. Why would the U.S. even consider such a radical move right now?
And then we'll shift gears. We need to talk about the truly massive implications. We'll look at that theoretical scenario.
The really extreme one, yeah. What if the entire world decides to follow suit? What if that whole $30 trillion global gold stash starts moving into Bitcoin?
Which sounds improbable, but as a thought experiment.
Wow,
Yeah.
exactly. But maybe just some quick context first, because this move, if real, is profound.
Definitely. I mean, since the U.S. ditched the gold standard back in '71, they've held on to the largest sovereign stockpile. What is it, around 261 million troy ounces?
That's the figure, yeah. Gold has always been that strategic hedge, the ultimate safe harbor in a storm.
So switching even a fraction of that to Bitcoin, which, okay, people call it digital gold.
Yeah.
It's still a massive shift in financial philosophy, isn't it?
It absolutely is. So let's get into the $600 billion claim itself. Where did Morehead reportedly say this?
Sources say it was during a closed-door event aimed at institutional investors.
Right. And the quote floating around is that the U.S. is preparing to participate big time. That was the phrase. Rotating out of some gold into crypto.
Big time.
Okay.
But let's pause here. How credible is this, really? I mean, Morehead runs Pantera. They're a major crypto investment firm.
That's the immediate counterargument, isn't it? He has a very clear vested interest in something like this happening. Is it genuine insight
Or just savvy market talk, maybe trying to pump the market.
It's the critical tension here. And it's really important for you, the listener, to know we have zero official confirmation. Nothing from the U.S. Treasury, nothing from the Fed. Zip.
Right, no official word.
However, the market reaction itself tells you something. It shows how seriously some major players took the rumor.
They certainly did. I mean,
Right.
after this speculation surfaced, Bitcoin jumped. It shot past $92,000 almost immediately,
While gold prices actually dipped slightly. Not a crash, but a noticeable dip.
which suggests the market was pricing in the possibility of, well, massive selling pressure on gold coming from a central bank, right?
Precisely. And there was a quote from Caitlin Long, the CEO of Custodia Bank, that I thought was interesting.
What did she say?
She pointed out that even the rumor itself grants Bitcoin a kind of legitimacy it hasn't had before at this level. Her point was, if this is true,
Yeah.
it legitimizes Bitcoin not just as a speculative asset, but as a sovereign-grade store of value. That's a huge statement.
Sovereign grade, meaning governments treating it like gold or, other major currencies.
Exactly. That's the implication.
And this isn't just abstract talk either. Some sources are apparently suggesting a timeline.
Yeah, there's speculation that initial large Bitcoin purchases, possibly done quietly, maybe through intermediaries or sovereign wealth funds to avoid shocking the market.
Right, you wouldn't just dump $600 billion on the open market.
No, you'd need a strategy. But the suggestion is this could begin as early as the first quarter of 2026.
Q1 2026, that's not that far away.
Which really brings us to the core question, why? Why now? Why would the U.S., which has historically been, let's say, skeptical of DeFi and protective of its gold?
Understatement, maybe.
Possibly. Why would they risk even a fraction of their reserves on something traditionally seen as volatile, like Bitcoin? Analysts seem to be pointing to 4 key drivers, and honestly, they mostly seem rooted in anxiety.
Anxiety. Okay, let's unpack those. What's the first one?
The first is about the domestic situation, hedging against debt and inflation.
The national debt, which is now over $35 trillion, right?
Exceeds $35 trillion. And when debt gets to that scale, the pressure mounts to find assets that can resist inflation and are genuinely non-sovereign.
Explain that non-sovereign part. Why is that so critical here?
Well, gold, while it's been a solid store of value historically, hasn't performed as well as Bitcoin recently in terms of sheer gains. But more importantly, physical gold reserves are, well,
Yeah.
physically controlled by the state holding
Right,
them.
they're in vaults.
Bitcoin, running on a decentralized ledger, exists outside the direct unilateral control of any single government. It acts as a potential hedge against the U.S.'s own monetary policy decisions or weaknesses.
Okay, so it's a hedge against yourself, in a way. What's the second motivation?
This one looks outward. The rising de-dollarization threat.
We've definitely heard a lot about this. Countries like China, Russia, others pushing to trade oil, other commodities, outside the U.S. dollar system.
Exactly. The U.S. isn't blind to this. They know the dollar's global dominance is being challenged, perhaps more seriously than ever.
So how does buying Bitcoin help?
Well, if the U.S. establishes a dominant position in Bitcoin reserves, remember, Bitcoin is global, decentralized, not tied to any one nation. It potentially secures a way to maintain financial influence even in a future where the dollar is less central. Think of it like an insurance policy against losing global financial clout.
Securing influence in a multipolar financial world. Makes sense. Okay, what are the other two? You said four.
The last two are more about future strategy, positioning. Number 3 is geopolitical strategy.
How's that different from de-dollarization?
It's more proactive. It's about grabbing a first-mover advantage in the emerging digital economy. If you dominate crypto reserves early on, you strengthen your hand as the financial superpower for the next era, almost regardless of what happens with the traditional dollar system.
So staking a claim in the future digital landscape.
Precisely. And the final one, number 4, is maybe the simplest but potentially profound for long-term policy: generational transition, meaning younger generations, the people who will hold wealth and influence in the future, generally show much more trust and interest in decentralized crypto assets than they do in, legacy banks and traditional finance.
That's true. There's a definite demographic split in attitudes towards crypto.
So policymakers might just be aligning national strategy with where they see society and wealth heading. It's about staying relevant to the next generation.
Wow. Okay, that's quite a mix. You've got domestic debt pressure, global power plays, future tech strategy, and even demographics all pushing in this direction.
It's a potent combination, yeah.
But let's step back from this specific $600 billion rumor for a moment. Let's explore the really big picture, the theoretical extreme you mentioned earlier.
Right, the thought experiment. Let's pivot from the plausible, maybe $600 billion U.S. move to the highly improbable but very illustrative scenario.
What happens if everyone does it? What if all the world's accessible gold, you said, valued around $30 trillion?
Approximately, yeah, as of late 2025 estimates. What if all that capital were sold off and reinvested into Bitcoin?
Okay, first thought. Injecting $30 trillion into Bitcoin. Its current market cap is what, around $2.1 trillion?
Something like that.
That amount of money flooding in? It sounds like a global catastrophe for the gold market.
Oh, absolutely. The immediate consequence would be chaos, severe chaos. Gold's price would just collapse.
Because the market would be utterly flooded.
Completely overwhelmed. It would instantly shatter gold's millennia-old reputation as a stable, safe haven store of value. You'd see the price discovery process for one of the world's oldest assets just descend into turmoil. Prolonged, intense volatility.
And the flip side, Bitcoin.
Bitcoin's price would, well, accelerate beyond almost anything we can easily conceive of. There was a NASDAQ estimate looking at this kind of scenario.
And what did they figure?
They suggested this kind of capital influx could cause the price to rise more than 12 times its current value.
12 times, which, depending on the starting point, pushes a single Bitcoin well past the $1 million mark.
Easily past $1 million per coin.
Think about what that does, $1 million Bitcoin. What does that mean for institutions? For risk modeling?
It forces every single hedge fund, every pension manager, every insurance company, every sovereign wealth fund on the planet to fundamentally reassess their entire approach to asset allocation. It would trigger the largest and probably fastest transfer of perceived wealth in financial history.
Unbelievable. So let's dig into those systemic consequences more. First, what actually happens to gold as a resource in this scenario, if it's not a primary store of value anymore?
Well, its function as a major stable financial store of value is basically over, decimated. But that doesn't mean gold becomes worthless.
How so?
Because its price would likely be dramatically lower, right? This could actually lead to a boom in its industrial utility. Think electronics, medicine, aerospace. anywhere, its conductivity and resistance to corrosion are valuable.
So less financial value, more practical value.
Exactly. You might see a huge new market emerge for recycling gold from e-waste and other sources. Its utility shifts from finance to industry.
Okay, now for Bitcoin. The first consequence is obvious, I guess. The moment its total value surpasses gold's.
That's what the crypto community calls the flippening. Bitcoin would definitively surpass gold in total market value. It cements its status in this scenario as the world's premier store of wealth.
But wouldn't that influx make Bitcoin even more volatile?
Initially, yes. During the transition, extreme volatility, absolutely. But here's the interesting paradox. Once that massive amount of capital settles in, we're talking trillions from nations, from huge institutions, that could actually stabilize Bitcoin's price over the long term. When the market is anchored by such enormous, stable pools of capital, the day-to-day percentage swings would likely smooth out considerably. It could become less volatile than it is today.
Huh. So chaos first, then potentially more stability later. And globally, what signal does this send?
It forces accelerated institutional adoption worldwide. If the world's central banks are making this shift, even gradually, it sends an unavoidable signal to every other financial institution. Get on board or get left behind. You simply can't afford not to have exposure.
In connecting this back to the bigger geopolitical picture, what are the really deep systemic shifts?
Well, first, it necessitates a complete global overhaul of central bank reserve strategies. You can't just swap trillions from gold to Bitcoin and carry on business as usual. The entire framework has to change.
And maybe most critically, you mentioned wealth and power earlier.
Yes. Think about where that gold wealth sits now. It's mostly in sovereign vaults, under the direct physical control of individual nations.
Right. Governments own it and control it physically.
Converting that wealth to Bitcoin moves it onto a cryptographically secured, decentralized system. Meaning it fundamentally changes the power dynamic. It strips the state of its absolute unilateral physical control over that portion of its reserves. When a significant part of the global financial system is anchored in a decentralized digital ledger, the whole system becomes inherently less influenced by any single government's monetary policy, including the U.S. The global system becomes less centralized, less dependent on the U.S. dollar, whether Washington ultimately likes that outcome or not.
That's a profound shift in power. So recapping here, whether we're talking about the, let's say, more plausible $600 billion U.S. rotation rumored by Pantera, or this wild theoretical $30 trillion global flippening.
The underlying message from the sources we're looking at seems pretty clear.
Which is?
The era of Bitcoin being just a fringe speculative asset, that's over. It is now undeniably a serious topic of discussion at the highest levels of national monetary strategy.
Right. The conversation seems to have shifted from if this asset class will integrate into national reserves
to how fast and how large that integration, that allocation will eventually become. That seems to be the real debate now.
It's truly a fascinating, maybe even slightly unnerving moment in financial history we're watching unfold. Thanks for helping us unpack the rumor, the rationale, and the frankly mind-bending potential of this whole scenario.
My pleasure. It's definitely a topic worth tracking closely, and maybe I can leave you, the listener, with this final thought and chew on as you do your own deep dive.
Go ahead.
Does this potential move by the U.S., regardless of whether it's $600 billion or something else entirely, does it ultimately signal genuine innovation, a smart hedge for the financial future? Or could it signal a kind of desperation, a reaction to facing perhaps insurmountable national debt and growing geopolitical pressures? Innovation or desperation? Something to consider.